First of all, I'd like to thank all of the audience for coming today and the panelists. For me, especially, that this is held in Cairo has a significant importance. I mean, digital financial inclusion is one of the hot topics here, and with an exclusion rate of 77%, it's the future outlook that a lot of financial service providers are looking towards to. So we have a very diverse panel that I'm excited to introduce, very cross-sectorial and focus on different regions of the world, and I think would provide very sufficient insights for today's discussions. So starting off to my far left is Pawel, who is the lead for financial service providers at IBM. They provide very sufficient research and advisory services for financial service providers when it comes to emerging technologies, how best to implement them in their institutions. And next to Pawel is Andreas. He's the Chief Digital Officer of GIB, mainly focused in the GCC region. And they've recently launched the first digital bank in the region, so it'd be interesting to hear that perspective. Next to Pawel is Jorge, who is Managing Director at Citibank, in charge of their financial inclusion strategy globally. And he's primarily focused on partnerships and the microfinance aspect of it. And then next to Jorge is Nadia, who's in charge of AXA's digital financial inclusion work when it comes to insurance and providing that to emerging markets. So with that, the topic of today is innovation. So we've heard in earlier discussions how important innovation is. And innovation is easy to say that we want to create innovation or have innovation, but actually implementing innovation is a whole different story. And having the ideas come from, be that new hires, middle management, or the emerging generations, is hard to kind of implement in some of the organizations. You have internal barriers, you have external barriers, which we will be discussing in more detail. But to start off, I would like to ask the panelists how they innovate within their organizations and what kind of barriers they basically had to overcome to do that. And I would start with Pawel. I would ask you to give us how IBM is creating a culture of innovation, be that process innovation, product innovation, creating the right talent pool of innovation to make sure ideas are fostered.
Thank you, Amin. I guess mic works okay. I'll quickly check. I recognize that I represent here not a banking institution, but a technology provider, a partner to you in your journeys and in serving your ultimate customers, which we are very proud of. And to speak on the topic that you asked about, I think it comes to three primary aspects from my perspective. And you mentioned one of them already, which is culture. Then method and approach to innovation, and also actual investment. And I'll speak briefly to the three of them. So in IBM, when we talk about innovation, we talk, actually this is one of our three fundamental values that were crowdsourced across the company when we were trying to define who we will be. And we speak of innovation that matters for the customers and for the world. So that's how it's captured. And I think it's very important that it is not an innovation in abstract. It's not something theoretical, but it's actually, we think of it as being something that it needs to have a practical impact. And again, we look at the practical impact for you, for the customers that we serve, and for the world at large. As I mentioned, this was defined not by some top-down edict, but rather as a result of a crowdsourced process. We ran a huge innovation jam to identify what are those principal values that IBMers across the world, and there's close to 400,000 of us, should follow. So that's how it came about. And the reason it's important and it's not trivial is because it actually is manifests itself in daily practices of IBMers. We are allowed to take risks. We heard about the importance of taking risks and potentially failing before from the chairman of CIB, and we fully agree with that. You cannot innovate if all you are going after is sure success. And this can be done at different levels of the organization. It is not just driven top-down. The second aspect, as I mentioned, is method. And we've distilled in our work with clients many different best practices across not only IBM, but also broader industries, literally 30 years of experience into something that we call IBM Garage. That's how we do innovative projects with all our clients today. And that method has a number of components. The most important is very popular method of design thinking that basically provides a structured approach to creating the right solutions and again incorporating innovation at the very beginning. Another aspect of that method is permission or rather desire to deliver something that works, because we believe that only by putting something in the hands of customers you can actually see if these ideas are worthwhile or not. And just quickly about investment, not to take away from other panelists, IBM last year invested just shy of $6 billion in research. That's an annual investment that we continue to grow every year. Research is a fundamental part of the company. It drives a lot of behaviors in the more commercial aspects of our activities. And I will speak to some of those initiatives later, but one that is very important for us here when we talk about financial inclusion is we look at creating new ecosystems that not only provide maybe access to financial instruments to these people who are underbanked or unbanked, but we also think about how they can sustain themselves, how can they repay those credits, right? And there are some very innovative startups as well as pilots projects from IBM that basically try to provide these people who have some frequently limited skills or no formal education, right, with ways of earning money in a better way that traditionally possible for them. So I will stop here.
Thank you, Pawel. Andreas, very interested to hear how you guys managed to roll out the first digital bank in the region. I'm assuming that needed some part of innovation at least.
Absolutely. So thanks again for the invitation. So we've been very fortunate in 2015 to launch Meme Digital Bank, which is the first digital bank in the GCC region. And we subsequently rolled that out to Bahrain in 2018 as well. But in terms of innovation, I would just say that for us, it's all about culture at the end of the day. So, and culture is about how do you embed innovation in how the business is run as opposed to something on the side where someone comes up with an idea or an external party comes in with a proposition. If it's not embedded in the way that you run the business, then it's really not going to work. So for us, we look at it in 3 levels. The first level is how big of a priority is it for the CEO, for the board. So we've created our own innovation board as part of our group board, which includes our CEO, our group chairman, our major shareholder, which is a public investment fund of Saudi Arabia, and we have leading CEOs from global digital banks on that board. And all we focus on is how we bring in the best ideas to the table from our staff, from external parties, and how we moving that through the ideation process. The second level for us is about middle managers, because people on the ground can have the best ideas, but if their managers don't allow them to participate, then once again you stifle the innovation. So we have a program with middle managers where we use them as coaches and advocates. So in our innovation center, they're actually presenting, they're facilitating, so they're buying into the process. They don't just create barriers for people not to participate. And the third one is frontline staff. What we're working on at the moment is how do we create capacity for our frontline people to spend more time with the customer in terms of understanding what issues they have, what innovations we can bring up, and so we can get all those ideas through through our process. So the last thing I'll just say in terms of the enablers, you've got to put some investment behind it, so it isn't just a theoretical thing. You've got to actually say, well, if we have a good idea, how are we going to fund that idea and take it from a concept all the way through to testing with customers? I think you've got to have the infrastructure, you've got to have the facility to run that. You can't be sitting in a traditional meeting room, boardroom, and having someone get up and present an idea and then have like a Shark Tank sort of. It's got to be a lot more dynamic and a lot more collaborative. And the third one is we've got it embedded in KPIs so that people have the time and the capacity to do this sort of thing, as opposed to their day job, which might be, settling a mortgage or calling a customer on a complaint. I think that's really important. The last comment I just raise is the most challenging thing that we've found is it's culture, but it's about how do you say no to ideas, because you get hundreds of good ideas, but then out of those hundreds of ideas, 99% of them probably don't have validity for whatever reason, whether it's commercial or customer. So it's about the art of saying no to those ideas, but still encouraging people to come up with different solutions. So.
And how do you do that? I mean, that's quite interesting. I mean, do they get set back when you tell them no? I mean, or is it?
Yeah, no, well, I think it's all about how you communicate. With all these things, it's about how you send the message. So once again, it's not like you go there like Shark Tank and they say, oh, that's terrible, and it's about how do you build on that idea, and maybe if you build on it, you can find something, or maybe the idea is a great one, but it's just not right for the time, So the art of that communication, so that you're not stifling the individual from coming up with new ideas, is really important, and we're working on that as well. We're not perfect, but it's something that we acknowledge we need to work on. It's important.
Thank you. I think very efficient framework there. Jorge, you're in a unique position. A lot of partnerships happening at Citi, and the internal processes also, I'm assuming, need a lot of innovation and internal challenges. So how do you go about creating that innovative culture within your organization?
Thank you. Well, let me start by thanking IIF and CIB for hosting us. It's great to be here. Yes, I mean, Citi has been working around innovation and running labs in 4 different places around the globe, in Singapore, in New York, and Dublin for many years. The idea there, as you are familiar with, is to have an appropriate environment for innovation to happen, with arm's length, so to speak, to the actual businesses, so that the ideas can flourish and then take them to the businesses. But I think more relevant to this audience is an initiative that we launched in Mexico City a couple of years ago, which is a lab as well, but dedicated to financial inclusion. Mexico for Citi is the 2nd largest market in the world after the US, and it's a country that has faces an enormous challenge in terms of financial exclusion. So, because of the footprint and the exclusion that's happening there, it was a very interesting place to test some of these ideas. So we have a team basically very immersed in the fintech community, locally in Latin America and globally as well, where we can be taking to the market ideas in record times for us. So that's a couple of months we can be doing proofs of concepts and things like that. We also run hackathons around the world, regional hackathons. The most recent one, by the way, was in Dubai for this region. And you'll be interested to know that an Egyptian company won the hackathon for financial inclusion, Khairy, which probably you're familiar with. So the idea there was to solve for small mom and pop shops needs and their connectivity with FMCG clients of the bank. So that's an interesting proposition. A couple of weeks ago, we ran another hackathon in Latin America, and we found very interesting names. Not the large multinational fintechs, but very focused fintechs that are solving for very local needs, because financial inclusion is a very local phenomenon. So I just want to conclude by giving you an example of how the process works. So this is in one of the hackathons that we ran a few years ago in Bogota. We found this fintech startup that came up with an idea that would enable us to provide credit to the last mile of the distribution chain of our clients. It is very rare in these hackathons to find solutions that are ready to market. You need to spend some time with them, with your internal experts, and try to bring the idea to a place where we can actually scale it. So that's a process that, in this case, took us like 6 months to a year to find the market fit and to make it scale. And we learned pretty quickly that we needed to pivot some of the things that they brought, but now we are scaling up, and we have around 700 shops in Peru that have adopted the solution, which is another thing that we need to take into consideration, the adoption side of it. So that's pretty much how the process works and how we're doing it in financial inclusion.
Perfect, thanks for sharing. Nadia, a unique perspective, insurance company, might be a little different than financial service providers providing access to credit. More important to you is making sure low-income segments are protected and insured. How do you go about doing that in AXA in emerging countries or within your head office?
Thank you for having me today. Indeed, the insurance industry, when it comes to insurance and innovation, this is something that the AXA Group has initiated on a worldwide scale at the group level with the dedicated innovation teams. But when it comes to financial inclusion and protection of those most vulnerable, the group actually figured out very quickly that we need some dedicated teams. Basically, our colleagues in emerging countries are already busy with the work. And if you look at the financial inclusion space, we're talking about very low volume, small premiums, betting on the volumes, and asking our colleagues to dedicate most of their time on, cracking the model to access to the customers, to understand the customers, is too much. So the group has actually dedicated a full team that is here to nurture the innovation, to support projects, to feed locally in each local country with ideas, resources, and help. Because basically when we try to innovate to reach the mass market, the vulnerables, we need to address access, so it's about partnership, but it's also about understanding the customer, reviewing the product range to make sure that we cover everyone, making sure that the operation follows to make sure that the customer is served properly and satisfied. There is no reason to downgrade the satisfaction expectation on that. So the whole value chain has to be reviewed, optimized, and rethought locally, in the local context, bearing in mind that we have a lot of regulation imposed to us, on top of our partners' regulation. If we partner with a bank, with an MFI, with a telco, with the digital players, we need to make sure that we are on track and we can deliver it. Mm-hmm. So the main challenges, to be honest, is internally we had to make sure that the CEOs commit and dedicate resources locally to make sure that this can fly in each country. In Egypt, we have an amazing team working on the topic, head by Hadila Abdelkader, and she is really doing a great job, and we are working with her, helping to either review the product range. We define a sandbox, for instance, to give risk budget to entities. Okay, you don't know the segment. It's a new segment. We want to serve them, but the standards that have been built on very high value contracts in the Western world do not apply for this segment. It's for the top of the pyramid, not the middle and not the bottom. Yeah. So we are developing the tools that the local units can use to invest in this segment.
Okay. So just to pick up on that, like Jorge also mentioned, financial inclusion products and services need to be very tailored to engage consumers and drive active usage. So these teams you're talking about, are they local teams with people from the head office? Is it a cross-collaboration so that you make sure it's tailored to the market?
It's a full cross-collaboration. We can't, from a head office, have a one-size-fits-all. We need to make sure that we have the local understanding and the group, AXA, has been built over years, and you have very different setup, be it Mexico, or Egypt, or Philippines, or Indonesia. So we have local representatives that make sure that the ideas actually materialize into something. We serve the customers, and that we actually reach the customers to understand what are the needs, is the product fit, can we collect feedback to loop it back in the product cycle to make sure that this is used, and that
Perfect.
there is value for them.
Thank you. So that makes me move on to my second question. With innovation comes challenges. We've seen challenges come from regulators, challenges comes from having an IT legacy system and integrating new technologies, challenges related to human capital, attracting and retaining the right human capital needed for the future revolution. So I would briefly ask all of you just to tell us some of the barriers you faced when trying to innovate within your institutions. And I'd start with you, Nadia, this time.
So barriers. Internally, one of the first reaction that we had was not risk aversion, but change aversion. So because it's a segment that is barely served by insurance companies, we invested a lot on capacity building, training on the field, bringing people to meet the customers and understand why the product doesn't get the right understanding, what it works, what is the real impact. So we really invested a lot on the capacity building locally to make sure that teams really understand what we're talking about, killing the preconceived ideas, and using all the toolbox that we set up. In terms of tools, we also faced the legacy IT system that is very particular in insurance companies. It's not about minimizing the product that we have, it's about adding the flexibility that we need today to reach the customers. So we are actually deploying a platform that is dedicated to the business, the emerging customer business, to make sure that we can be fast with our partners in a way that can actually manage all the information, all the volumes, all the flexibility that we need. And this is deployed locally to make sure that we meet the local standards, the local regulation, that we respect data privacy, etc., etc.
Well, the first one is internal, and that's a reality, and it comes in two ways. We need our product partners on the ground to adopt the innovations that we come up with, and in many cases, you might be disrupting what they are already doing. So you have to understand that, and I have many examples on how we had to significantly change the way we were operating, and we were basically attacking the way this particular product group was working. So that was the first kind of barrier that we had to overcome. The second are our internal regulations and compliance. Citi sometimes can be an extremely regulated place because we have US regulators and the local regulators as well. So everything we do, and it has to do with mobile money and things like that, by definition would face internal compliance regulatory obstacles or challenges that you need to overcome by partnering with them, by having them understand what you're doing. The other part comes with the actual fintechs. We're dealing with small fintechs that have limited runways. If we realize that we do not take these solutions to market in record times for us, you might be compromising the fintech's ability to survive. For 1 month for them, it's like 1 year or 2 years for a bigger company. So you have to react very quickly. So sometimes what we've done with them is to actually establish contracts where you pay them when they start. They come with you and they start the proof of concepts. They can get some revenue even when you're not there yet out of the market. So that helps the fintech increase their sort of the runway.
It's an agreement between you and the fintechs regarding, even if the product hasn't been launched, we are making sure that you stay sustainable.
Exactly. If you are sort of admitted, or we've decided that we're going to work together, probably we can get an arrangement where you can start seeing some revenue, even when we're not yet in the market. So that gives them breathing space, and that's something that we understood quite quickly. So those would be two of the main challenges. Of course, we have local regulations as well, and how to deal with those. But I think, from the work that we've been doing in all these emerging markets, regulators are typically, very open. In many cases, they have sandboxes. They have, ideas like that can help us, test the solutions.
Andreas?
Yeah.
Is the mic? Can everyone hear us?
I heard my name.
Yeah.
It's okay. No, look, I just want to add one quick thing. When we talk about fintech, sometimes we talk about that in the context of a microservice within a customer journey. So you look at, KYC, or you look at PFM or chat, and that's all well and good, but that's really a microservice, right? One good example I'd share, which is something we're working through at the moment, is we are launching a new business segment. And we're pretty much going in 50-50 with a fintech to launch this new business. And it's just, you talk about the challenges. So one interesting thing that I found was we're obviously partnering with this fintech because they have the platform, they have the way of working, but we have the license, we have the brand. So it's a complement of two strengths. But initially when we met with the fintech and they walked us through their journey, we were really excited about what we could do and the cost of doing that, right, versus what we would traditionally do. And then we went back to our business and said, okay, this is what we want to do. And the ops team then looked at it and went, oh, okay, that's 10 people, right? And that was, so the first reaction was, okay, we need to apply a traditional process model on top of this fintech platform. And it wasn't until you actually went through the process of saying, well, hang on a minute, whatever you've been doing in the past, you don't need to do that anymore, because we now have it in a dashboard. We bring all the document through, which is right-faxed or scanned or whatever. We pull the data into a form, which you can then review. So once you go through all of that at a lower level, and people then sit back and say, well, actually, we don't need 10 people. We need half a person, and it's within our capacity already. So I think to answer the question from my perspective, one of the challenges is that is about how you bring the external innovations into an organization and then get a different mindset around how you do things and how you adopt that, as opposed to just layering on top the old ways that you always used to do things, which are obviously not sustainable with that sort of a cost model.
Thank you, Andreas. Pawel, from your perspective, how are some of the barriers you guys are facing, and how are you overcoming them?
So I'll speak to three things. The first one is the challenge that's specific to all the technology vendors, but is a play in a sense of what Jorge was saying also. And that's this need to balance exploitation and exploration, right? So exploration being completely new innovations that we can bring to market. Exploitation is frankly making the business, close his annual books and deliver the profit that we need. So making more of the same, right? And I guess the clue here is to work closely with the client, with the customers, to figure out that balance, the right balance of when and how to innovate, which is another way of saying, you have to find a way of non-intrusively working with your clients, and that's how I connected with Jorge with what you're saying. So that's one issue. The other is, scaling innovation up, recognizing good ideas and then scaling them up throughout the organization, or, bringing them to other markets, right? William Gibson many years ago said, the future is already here, it's just not evenly distributed, right? And recognizing that there is this piece of future somewhere, we are looking at it and taking it more broadly is a big challenge. I think here, some clever tools can help a lot in terms of both brainstorming, identifying such ideas, and then sharing them both within the organization and with broad market. We have lots of lessons learned on how to do it in a not so good way, and there are some good ways as well. And lastly is the issue of skills and basically maintaining the talent pool that you want to have internally, and making sure that people are motivated to stay with you throughout the journey, right? Here I'm proud to say that IBM is doing a lot of with both Egyptian and African market, broadly speaking. We've launched some very important educational programs to start building those skills at the high school level and then going through the graduate university and graduate programs. There is a program that's online and program that's also in person in classroom. You can get open badges through those, and that's all about building that pyramid of skills needed for the future. On top of this, some forms of cognitive, of AI, can help in managing actually people's careers. The recent research from Oracle actually was quite amazing. Over close to 65% of employees would rather be managed by a chatbot, an AI bot, than by their actual human manager, right? So that's a word of caution for all of us who manage people. And I guess there are some good reasons for it, why it's the case. Happy to take them offline, but the story here is that, yes, some clever AI tools can be deployed to help in that problem.
Thank you, Pawel. And just to shift the conversation a little bit about the future outlook. So we've seen a changing ecosystem with technology companies entering the financial services area. We have Chinese companies such as Alipay and WeChat and Tencent basically coming into this space. More recently, we've had Facebook trying to do the Libra initiative. And I mean, they do have some strong points, which is they have high customer engagement and they know how to cater certain products and services to the needs of customers. On the other hand, financial service providers do have a kind of advantage when it comes to trust, protecting client data and managing it in a secure way. And I was just curious to get your perspectives on how do you see the ecosystem evolving? How do you see financial service providers staying relevant in that ecosystem and being able to compete when it comes to low-income segments and utilizing that technology in a sustainable manner? So just whoever wants to start off with that, it's fine.
Maybe I'll start. Just a quick point of view. I think at the end of the day, you've got to play to your strengths, and I think your strengths vary depending on what segment you go after. So I think our view is for some segments you want to lead with your brand and maybe partner on the tech. In other segments, you might want to partner on the brand and the tech. So there's always a combination of things that you might do depending on the proposition and the segment. I think that for me, you look at on the payment side, there's a lot happening there, but obviously that's also a service on its own, and then it's a question of do those services expand across banking products? So in terms of credit cards, personal finance, other deposit products. That's a question that's still open in this region, in the GCC anyway, that I haven't seen. But then at the top level, there's other partnerships, banking and telco, that I think are probably going to be more disruptive in terms of changing the customer proposition, because there you have you have the brand, you have the customer data, the license, and you wrap all that together. I think that's probably a more holistic proposition. So I guess from our point of view, it's about we have to pick how we partner with different entities depending on the segment we want to play in. And it's not, for us, it isn't about, if you go back 15, 20 years ago, where if we were to say, okay, we want to get into this segment, we would do everything ourselves, all the product manufacturing, all the development, et cetera, et cetera. It would take 2 years and we spend a lot of money, and we might not even be anywhere near where we need to be from a customer journey. Now it's about saying, well, how do we bring the best together to do something fast and deliver a good proposition? Yeah.
If I might add, the way we look at it, financial inclusion especially, it's such a big challenge globally that we don't think one single institution or government can solve it. It will be all about partnerships. And I think the days where banks or fintech as a threat are long gone. I think all banks that are making progress have understood that we need to partner, we need to, as Andrea is saying, identify the strengths of each one of the players in the ecosystem and play for that. In the financial inclusion space in particular, trust plays a very unique role. because it's not only the technology, it's the familiarity as well. Some of the most successful programs that we've launched have incorporated, for example, microfinance, local microfinance institutions that have that trust, that have been dealing with this customer base for decades, or convenience store chains, places where people do their shopping 2-3 times a week. They know the teller by name. They know the brand. They're familiar with the brand. They don't, care about the Citi brand, and they have never been sort of felt welcome in bank branches. But they understand these places. They know, and they're familiar with these places. Or it could be even the truck drivers of FMCG companies, and that they do direct distribution. They see them twice a week, and they have a relationship. So we are taking advantage of those relationships and creating partnerships that, from a technology perspective make sense, but also from a marketing and familiarity and trust perspective makes sense.
I agree. When it comes to insurance, looking at all the fintechs gives us another avenue, another way, another path to reach customers. So it's essential for us to build partnerships, sustainable ones. So we need to really align on the vision when it comes to financial inclusion, to what it is that we want to serve the customers with. And we see those fintechs as an amazing tool that are still not enough, because as Jorge said, customers still need the trust, and which mostly relies in people. And so you have this mix of physical and digital that is quite interesting. And when it comes to insurance for customers who never had insurance before, it is key for us to make sure that we build a partnership at the right level. Do we do it in a white label? We don't mind, as long as the customer is properly served. One key challenge that we see from those players is the technology that they have, the time that they make us win, our requirements when it comes to how do we serve, how do we answer customers, what is the time, the turnaround time that we need to commit now, because basically those services becomes quite tools to provide instant service, instant gratification, instant answers. So we need to manage expectations. Insurance is not just like a payment to be done. There's more, but at the same time we need to enhance our operations to make sure that we are aligned and that the partnership is sustainable, both for the fintech, that they're happy to work with AXA, but also for the customers using the service and seeing that this works and this is properly delivered.
Thank you. Pawel?
So I will basically try to reiterate what you all talked about in a techno speak, right? Geek speaking here. We believe that to sustain themselves, by the way, we have research and others too that show that all this banking disruption happened, but not as much as people thought it will, and the established financial institutions are doing just fine. Not to say that they should be complacent, but the value of having established customer relationships and customer data and basically having those markets is huge, and it cannot be easily overcome by just startups coming fresh to the field. So we see much more of these partnerships that you talked about. And to really take advantage of them, the first point I'm going to make is we're talking about ecosystems, orchestrating ecosystems and building platforms, right, which are really multipolar kind of constructs in a sense that many different parties participate together. One early example of that when it comes to the financial inclusion, microfinance and agriculture, actually, we started such a pilot in Kenya where we put together the farmers who need access to the machinery but can't necessarily afford it, the tractor owners who have tractors but don't necessarily have all the usage for them all the time. They have access to these farmers. Banks which can finance operations and eventual purchase of the machinery. Weather prediction, which is provided by IBM to actually predict when those tractors should be used, how much seeds should be planted, and so on and so forth. And actually insurance also, right? And you can see that now that we're talking about an ecosystem that involves 5, 6, 7 different types of players and many different participants on a nation scale of a nation, right? and it allows all these players to get something out of that, new out of that orchestration of interactions that no one could get it before if they just worked on it on their own, right? So the idea of building such ecosystems more is one important thing. The second aspect is embracing open innovation. You know, that's what fintechs are all about. There are some technological underpinnings for it. If you're interested, read that old story around the Cathedral versus Bazaar, which was published in '97, I believe. It's all about moving from a closed ecosystem where one company or a small subset of companies try to innovate to really throwing yourself open to the market of ideas, and that allows you to take advantage of them much faster if you're fit for that. And last point I will make, and that will connect to your trust comments, is you know, the insurance and banking industries need to get serious about their data, because you guys sit on a trove of data. Clients trust you with this, but you have to take advantage of it, and you have to do it in a way that doesn't violate the trust, right? So whatever you do with it, and there are some good and bad examples, because if you lose that trust, which is your differentiating factor, in both cases the industries are way ahead of others. When it comes to customer trust, it's a huge asset, hugely underutilized, much more can be done.
In that aspect, I think CIB's logo, A Bank to Trust, is a very good logo to have, right? Just one point I would like to highlight is all of you managed to talk about open banking being the next kind of differentiator for a financial service provider. Connecting through different vendors, retailers, governments, fintechs, to create more of an ecosystem that can serve customers well is going to be key to compete with technology companies going forward. So if I could just ask Jorge and Andreas, you both talked about partnerships, specifically Andreas, when you mentioned MNOs, and Jorge, the different initiatives you guys had. I would like to know what kind of challenges you guys faced, especially when it comes to partnerships. I know the revenue structure model, for example, who owns the customer, these all can be very important deciding factors if a partnerships work out or not. What are some of the challenges you faced, and how have you overcome it?
You want to start? When you were talking, I was thinking of one of our most important partnerships for financial inclusion is with a telco in Latin America. It's the largest telco. It happens to be also one of the owner of the telco is one of the wealthiest men in the planet. So egos play a big thing here. You know, it's how do you manage to align your mission and your vision. Sometimes these investments will take time to become you know, profitable. You have to be patient for the market to adopt it, to start cross-selling. So in this case, it's not easy to align those views, because they might have or you know, banks and telcos might have very different views in terms of what profitability means, you know, and the time that it takes to materialize. So that's one that comes to mind.
Andreas, any thoughts on that?
Yeah. I just say a couple of things. So I think it's about how do you pick the winners, and it's one of those things. You go to a conference like this and other conferences, there's so many good ideas, so many different players that you can partner with, and it's a question of, you know, who do you pick and how do you create some longevity in that partnership? Because even though we'd all like to think that, you know, as a bank we're very agile and we can, you know, move from one partner to the next, you know, quite easily. The reality is, it's probably a medium-term relationship you know, that you need to think about. So, you know, what does that partnership look like over the medium term? You know, what's their roadmap look like? The quality of the leadership, the innovation, how you work together. I mean, you've almost got to become like a venture capital, you know, firm in a way when you look at all these partnerships and think, well, how can I, you know, work with them over the longer term? And okay, the Academy Awards, I'm getting my. No,
please finish whatever you have to say.
No, that's all I want. Look, I think it's you know, you have to take a long-term view on some of these partnerships, and you've got to try and pick the winners as best you can. That's really
Thank you, Andreas. Please give a warm hand to our panelists for joining us today.